it's my time, think it's my year, yeah.
Buddy, happy Tuesday. This is the morning show, Stock Market TV. Spencer, JC, Steve, Alfonso, you know the drill by now. What is going on? Let's see what's in the dock today. Let's see. We got to talk about this XLK rebalance. We just have to. It's gonna happen on Friday. They're gonna be doing some swapping of positions. Apple, Nvidia. I'm sure the guys will have thoughts on that. I have thoughts on that, and I'm not even one of them. Lennar is on the dock. I want to talk about Philip Morris today. Getting hit on some news. I'm sure the guys have charts on their mind. Greg Harmon is the guest, new guest. I've known Greg for a while. He is the founder and president of Dragonfly Capital. He'll be on the show at around 9. We'll have Patrick Donawilla from the chart report on a little bit later on. And that is the drill. Your morning chat. What are we talking about today? Anything good? Retail sales? Oh, retail sales. Retail sales moved the market for like 3 weeks during COVID, right? And that was fun. Harminder, I'm getting a new graphics card. Actually, funny you mentioned that. So it's on the way, or so I'm told. All right, enough about me. Let's bring the guys on and start the show.
All right, ladies and gentlemen, happy Fibonacci Day. Let's go. 618 today. How you feeling? You feeling as good as me? Math nerds all over the world celebrating?
You did the poll, and what were the results of, like, what's the more important day?
Ooh, that's a good question. Let's see. So the question was officially, which one is the more special day to Fibonacci enthusiasts? Is it November the 23rd?
Yeah.
Which is 1, 1, 2, 3, representing the first 4 digits of the Fibonacci sequence, or is it today?
Isn't that the day, the official day, November?
I mean, it's the unofficial day, right? You know, it's up to enthusiasts worldwide to decide for themselves. I, who have been known to celebrate quite a bit. One of the things that I learned about celebrations when living in California, these guys were always looking for reasons to party. They would have harvest festivals. They would have, there was always like some dead Mexican's birthday, or some, like there was always something going on. Like, I think they were just making this stuff up after a while. And I really appreciated that sort of mentality. So for me, call me selfish, I celebrate on both November the 23rd and on June the 18th. June the 18th, 618, golden ratio. How you doing?
So you felt like making your own holiday.
I didn't make my own holiday. That's what they do in California, in Sonoma, where I used to live, which is cool. I'm all for that. And by the way, so to answer your question, Mr. Strazza, approximately 68% of voters said that it was today.
Oh, interesting.
So about 2/3 of the voting said that today is the more important day. Only 1/3 said that it was the November holiday. So
I like today too. It makes more sense to me.
Also, the November holiday, it gets diluted with Thanksgiving.
Yeah.
Thanksgiving is my favorite non-math holiday of the year.
And don't you think it's just more like most people know 618? They might not necessarily know the sequence itself.
Yeah, that's true. It's true. So you're saying that people choose today because of ignorance, is what you're saying?
I think most people understand that 618 is a Fibonacci number. 1, 1, 2, 3. I think most people will be like, yeah.
Yeah. No, that's fair. It's a fair point. Got to give credit where credit's due. Strazza making great points this morning here on Fibonacci Day. So shout out everybody. How are we celebrating? What are you doing to celebrate?
Did you watch the basketball last night?
I did not.
I fell asleep. Celtics.
Yeah, I really couldn't care less about the people from Boston or people from Dallas.
Yeah.
Like these kind of people don't matter to me at all. Also, it's very sad that Steph Curry, LeBron, KD, right? Like all these guys are retiring. So this was kind of, it was kind of boring, right? I think it's pretty unanimous that nobody really cares.
Yeah, that's true. It was
right?
a bad series. Also, when I made those comments about Rory yesterday, JC, you were right. I had no idea what had happened. I did not know that he stormed off and skipped his presser on Sunday night.
Listen, it's not my fault that guy's just a little bitch.
He gets emotional. Did you see the whole Ryder Cup situation last fall when he was screaming at the U.S. caddy?
Yeah, I don't feel bad for this guy at all. I don't know. I mean, maybe stop being such a piece of shit.
He's not a piece of shit. He's usually a class act, but this
but don't be hating on my country. That's it. Don't be hating on my country, or you're gonna have to deal with me. You hear that, Rory?
I think he just
got to deal with me.
I think it's more that he just loves his, and that's okay. But he's taking this weekend off. He's like taking time off.
All right, nobody will miss him. Yeah. What do you say we hit the markets there, Mr. Spencer Israel? All right, let's do a quick little rundown. Dow futures doing absolutely nothing this morning. S&P futures doing absolutely nothing this morning. And the NASDAQ doing absolutely nothing this morning. Hey, that happens too, right? So Dow futures literally down 0%. S&P's down 0%. And the NASDAQ up 0%. See how that works? Bond futures, however, up almost 0.5%. 30-year bond futures up above 120. 10-year bond futures up 0.25%. Also, crude oil flat, just under $80, just a tad under $80 for crude oil. Copper down 1.25%, $4.40 for copper. Gold 23.35, not doing much this morning. Silver down 0.5%, 29.25, still under that 30 level. Volatility index still under 13. Over in the old funny money, we're looking at Bitcoin down another 2% this morning. 65,000 and change for Bitcoin. Ethereum 3,400 down 100 points today. That's 3% to the downside for Ethereum today. New multi-week lows here for Ethereum. Solana 136, levels not seen since the beginning of May. New 6-week lows today for Solana, down 5%. And Binance, talk about pulling a Rory McIlroy, really, really blowing this one. Had all the opportunity in the world to be a leader. Has just completely shit the bed. Binance down another 4% today, 580, down another 25 points. Binance, what a disappointment, right? What a disappointment that Binance. I was thinking from a structural perspective, if Binance were to break out, chances are some of the other ones would too. As it turns out, it was the exact opposite. Binance just not able to make any moves. How do we feel about that, guys? No? How do we feel?
Breath is really bad right now.
In the in the funny money or in the real money?
No, crypto. Look beneath the surface. Even like last night, things were getting blasted. Bitcoin's holding up far better than everything else. I'm not going to say that Bitcoin can't break out in a tape where there are poor internals for cryptos. It could happen. We've seen Bitcoin trend really well. I think it's tougher, though. It's tougher to make that bet.
Let's get back to Fibonacci day here. And yeah, Dawson, JC's patience keeps winning, right? Like I've been super patient with this trade. A couple of times it's been a little frustrating just how patient I've been, but it all keeps coming back to continuing to win in that patience in the crypto markets, particularly from the blue chips, like we discussed. So yeah, appreciate the shout there, Dawson. I'm totally with you.
We're not losing any money. We're not losing any money over here to put on these risk reversals. So we reloaded again yesterday.
Risk reversals in what?
Putting on short-term risk reversals in the Bitcoin miners and
and the miners. That's a different trade. I'm talking about the cryptos themselves. Yeah, those are different trades. Yeah. And they behave differently too.
Well, the miners' resilience can't be ignored at this point, right? So if you can get the puts to pay for the calls, we're just making the bet that eventually the calls pay.
Yeah. Also on the not to harp too much on the options market, but in some of these crypto miners, you're getting juice way out.
Yep.
Strikes super far away, so you can sell further out of the money calls to pay for less out of the money calls. Also, they're super juiced up, looking way out. We could talk to Sean about that if you guys like, but let's get back to Fibonacci Day here. People are like, well, JC, what do we do with this math? Okay, great. We celebrate, whether you celebrate by going for a walk, or celebrate by drinking a bottle of wine, or celebrate by going to the zoo with your family, whatever it is, however it is that you celebrate Fibonacci Day. Maybe you watch a documentary on Leonardo Fibonacci. I don't know. There's a lot of different ways people say. I don't judge, Strazza. I don't judge how people.
Hold on. If there was a good documentary about Leonardo Fibonacci, you would know about it because you're the YouTube documentary guy. Is there one out there?
I don't know the answer to that. I am working on and I'm glad we have Greg Harmon here today. We can talk about harmonics, but we have a math course that we are coming about very soon, that I've been working on behind the scenes with a couple of Top Gun fighter pilots. And we're going to talk about the importance of the oop-de-oop. Familiar with the oop-de-oop?
Who's doing a math course?
We are. I'm working on it behind the scenes. And are you familiar with the oop-de-oop?
Who?
Definitely saying it wrong. If you guys are familiar with the oop-de-oop, can we get a hands up?
Who's doing the math course?
I'm working with a couple of Top Gun fighter pilots that Bartoloni introduced me to.
Okay.
We're going to really dive into sacred geometry in financial markets, and really going to geek out in terms of math. The oop-de-oop is really fascinating. I'm definitely saying it wrong. It's like oop-de-oop. It's definitely not oop-de-oop.
I golf with a fighter pilot, and he also loves math, and he thinks that because I'm a markets person that I want to nerd out and like talk about physics and calculus with him while we're golfing. It's really cute because I don't.
JP Morgan's most recent earnings report, Jamie Dimon talked about the importance of the oop-de-oop.
I don't know what.
I'm just saying. Maybe that's what it is, hoop-de-loop.
And Jamie Dimon,
you guys know what I'm talking about.
Jamie Dimon says a lot of things.
I'm just saying, Jamie Dimon's talking about the importance of the oop-de-oop, and I find it pretty interesting myself. I'm not going to lie. So anyway, more on this. I just wanted to throw that out there. It is Fibonacci Day, right? What the fuck is an oop-de-oop? That's what I said, Dawson. That's what I said. OODA loop. That's it. Josh knows it's the OODA loop, not the oop-de-oop. It's the OODA loop. There we go. And yes, pilots are definitely math nerds. You'd be surprised to know how many technicians out there are pilots. Jeff DeGraff is one of those. David Keller is another one, right? OODA loop. See, there we go. Observe, orient, decide, and act. There you go, Josh. Come on now. Shout out to the OODA loop or whatever. Okay, back to Fibonacci. Throw up slide 2, please, Spencer Israel. So this is a good one. So here on Intergalactic Fibonacci Day, right? Because National Fibonacci Day is in November. So this is the more intergalactic global, Fibonacci Day. Here's the Dow Jones Transportation Average, which one can argue is the second most important stock market index in the world, right? One can argue that. Retracing exactly 61.8% of the entire rally off those fall lows.
Mm-hmm.
And then on Friday, kissed that retracement, just gave it a nice smooch, and then bounced off from there.
Mm-hmm.
How do we feel about that?
Yeah, you buy this. You buy corrections in bull markets. Jeff DeGraff said you buy oversold conditions in primary uptrends. You tend to buy weak breath environments in bull cycles when you make good entries. This is one way to do that, right? I prefer to buy in a little strength off of support, right? Drop a VWAP from the pivot highs here. Use that to get you in. But you want to start fibbing out these advances from the October lows from last year, looking for logical support levels. and trying to pick your entries.
You want to start fibbing it out, right?
You want to start what now?
Fibbing it out.
Yeah, fib it out.
Fibbing it out. Okay. So this is so here we are, which I think sheds some light on the question that everyone is asking. Go to the next one there, Mr. Spencer Israel. Are the Dow Jones Industrial Average stocks going to catch down, confirming the weakness that we've been seeing in the Dow Jones Transportation Average, right? Dow Theory 101 stuff. Or, right, because the big concern from all of the breadth experts out there on the old interwebs is that the industrials and other indexes are going to catch down to the transports. But here on Intergalactic Fibonacci Day, when we are reiterating that on Friday, the Dow Transports bounced off of that key 61.8% retracement. What if the risk, bear with me now, Strazza, what if the risk is that transports catch up, confirming the strength we've seen out of the Dow Jones Industrial Average and others?
Well, that's
Do you think that that is a major risk considering the 2-year anniversary of this bull market? It was just a couple days ago.
Wait, do I think it's a risk that transports catch up?
Yeah, I feel like most people are saying the risk is that industrials catch down and the indexes catch down.
Yeah,
when
no.
the risk could very much be to the upside, transports catching up, confirming what we're seeing. You get rotation into financials and industrials that have been struggling for months now. What if that's the risk?
And that's why most people lose money. It's easier to be scared than confident, right? So what a lot of people will do is they'll look at a situation like this. They'll see market weakness over the course of, I don't know, a month now, longer. You could say a couple of months. And they'll look at that weakness and they'll say, oh, wow, look at the indexes just teetering, barely hanging on. It's only a matter of time until they catch lower to the laggards. We have two things that could happen here. Either the laggards catch higher to the leaders or the leaders catch lower to the laggards. In bear markets, it's very common for the leaders to catch lower to the laggards. It's also what we see at market tops at the end of bull markets, right? During bull markets, it's the exact opposite. It's what we saw at the October lows last year with a very thin market. The whole first 2-3 quarters of last year was a very thin market. Then all of a sudden Q4, explosive breath. The laggards caught up to the leaders. I don't think this time will be any different.
Also, just keep in mind that the quote unquote weak breath early last year came with the greatest first 6 months in the history of the NASDAQ.
Yeah, people forget.
And hold on. And those stocks that led the NASDAQ or that are leaders in the NASDAQ were the only stocks that were not participating in the back half of 22. So when people were crying about it only being 7 stocks, number one, that just wasn't true. They just didn't bother to count. But also, when you talk about such massive sector rotation into the only areas that weren't working yet, that's just not weakening breath. That's positive sector rotation, which is part of the reason we were so bullish last year. Right?
And then those same people will get frightened and say, oh, no, this is bad. Correlations are spiking to 1.
Yeah. People are just angry with their own lives and situations, and they want to take that out on their portfolios. They feel like losing money in their accounts is a great way to make up for other deficiencies and other aspects of life. Like, I think that losing money probably just makes things worse. Call me crazy, money doesn't solve problems, but it certainly makes life easier, right? It makes life easier to have a good time when you got a couple extra bucks, right? Like Strazza's caviar obsession over here is not good for the wallet, right? We got to make money so that Strazza can have his caviar and sparkling wine. Am I right, Strazza?
I got to do well out here. I like nice things.
You bougie bastard.
Something I know about myself.
Okay, so the risk here on Fibonacci Day, potentially transports catching up to industrials. And I got another one for you. And we talked about it last week, and I want to talk about it again. Next chart, Spencer Israel. Next chart. This is, this one, built-in catalyst. A lot of people, speaking of taking your anger out on other people, some people just don't like this Elon guy, right? They just don't like him, I guess. I don't know. I've never met the guy, so I really don't give a damn at all. I see a massive uptrend. This company went from $30 billion in market cap to 1.3 trillion in a couple of years. No CEO ever has created more wealth for shareholders this fast in human history. So if a CEO's only job is to increase shareholder value, and I'm a firm believer that that's what it is, anything else the CEO does, obviously he wears a lot of hats or she wears a lot of hats, but with the ultimate goal of increasing shareholder value. There are various ways to do that. You know, keep employees happy, keep customers happy. There are a lot of different ways to increase shareholder value, but at the end of the day, all those things are just to increase shareholder value. No CEO in human history has done a better job than a one Elon Musk.
I mean,
30 billion to 1.3 trillion in a couple of years. Go ahead, Spencer.
well, looking at this chart though, couldn't you just say, I mean, the longer a stock hangs out at support, you know, finish the sentence, the more likely it is to fall through.
Yeah, and it's just, it really hasn't hung out there very long, right? It's bounced a couple of times, but I think that this multi-year digestion of those prior gains are very well deserved. I would argue the most well-deserved correction in stock market history. Digestion of those gains. We've never seen an increase in market cap this fast, this much, right? Ever. So a multi-year digestion of gains, very well deserved, down at the 61.8% retracement of that entire move. And here on Intergalactic Fibonacci Day, I think it's important, to show how we use this basic arithmetic, right? It's not complicated. This isn't sacred geometry. This isn't the oop-de-oop where the math starts getting really complicated. This ain't that. This is very simple. It's very simple. Line go up, line consolidate, get ready to go up again. Last one, Strazza, this one's for you. Last one, please. So this comes from our good old friends at JP Morgan.
Is this the fund manager survey?
This is the fund manager survey is Bank of America.
It's not from
who does the fund manager survey, Spencer. This is JP Morgan's, customer survey. Are you more likely to increase or decrease equity exposure over the coming days? So here are the percentage.
Wait, what does that mean? Coming days. What does that mean? Is that 5 days?
Coming days or
30?
weeks? Coming days or weeks. In other words, how do you feel now?
Here's the thing.
I think it's a good way to ask the question. First of all, sentiment
it's the best way to ask the question of any of these surveys, is it not? What are you doing with your money?
Yeah, it's a pretty good question, I think. And not every survey has faults. Every sentiment indicator has faults. None of this is perfect, and we know that. But I think Strazza is right. This is a great way to ask the question. So the question again: are you more likely to increase equity exposure over the coming days and weeks? In other words, what are you doing now? How are you feeling now? Right? Not 3 months, 6 months, a year. What are you doing now? Only 17% are interested in increasing their exposure. These are levels that we haven't seen since last summer, which was a great time to be buying stocks in that dip last summer into August and September. That was a great time to be buying stocks.
Yeah, but this reading hit an extreme in June when the market peaked. It
was after. This was like August.
This
was after June.
Okay.
But yeah.
Well, the market
that correction there.
Early November, late October.
What did?
Oh, I'm just saying it's not a signal. Is all I'm trying to say. Spencer's asking.
Oh no. And we know that sentiment never is. It's a function of identifying the current market environment is really what it is. And we can quantify this a million and one ways. One thing we know for a fact is that we are not at extremes in bullish sentiment. Can we all agree with that?
Yeah.
So we're either leaning towards bearish sentiment or somewhere in the middle. And I would argue probably a lot more of the latter, probably somewhere in the middle, right?
I think
this is a nice little anecdata here for you guys that I found interesting. No?
Yeah, it's a survey. Surveys will be surveys. It's fine.
Surveys will be surveys. It's not perfect, but interesting nevertheless. Yeah, somewhere in the middle, middling around, right? Sentiment usually is. We
Where
pay a lot more attention at extremes, and by definition, sentiment is rarely at extremes.
I think I really like this one thing we do, the sentiment composite. Grant dropped a bunch of charts earlier. I'm going to check if it's in there. But so he blends like what 6 or 7 sentiment indicators together, and we just look at them all on an aggregate basis. I think that's the best way to do it, right? Because you don't want to just take any one of these sentiment indicators and act on it or weigh it really at all. I think you blend them all together, and then when you get extremes in that, you pay attention. And right now we're kind of stuck in the range. We are moving closer to a bullish reading though, so that's cool. The sentiment composite.
You need bulls to have a bull market, right? You need bulls buying stocks to have a bull market.
Yeah.
So sentiment historically is definitely much more actionable is probably the word I'm looking for. More actionable on when there's a lot of pessimism, right?
The consumer sentiment, that's an interesting one too. Financial stress index. Yeah, we got a lot of these things. Nothing from the put call ratio right now. NAAIM exposure index is actually an optimistic range, which is bearish.
Is it? It's not bearish.
The exposure
if NAIM is in a more optimistic range, what's bearish about that?
These are contrarian indicators, right?
No, NAIM. These guys stay bullish throughout bull markets. Yeah, go back and study bull markets. You'll see that they're on the more optimistic end for the majority of that. I spoke at their conference last May. They were super bearish, super nice guys. They're just a bunch of nerdy financial advisors. Like they're cool, they're harmless, but they stay bullish for a long time.
Okay. Well, I think it's a contrarian indicator just looking at the charts. So let's throw it up. Let everybody decide for themselves. Slide 2.
Just telling you, they could stay optimistic for quite some time.
As you can see, it tends to be in optimism range when the market tops and pessimism range when the market bottoms.
That's such bullshit. Look at 2013, 2014. Stock market was going straight up. They were extreme bulls for quite some time there. Look at 2016, 2017. Look at 2021. I mean, they could stay optimistic for quite some time. Here's another great example. They've been pretty optimistic for a while here, and the stock market keeps going up.
So I almost never think about any of this data, and I think that's the right way to go about it, unless it's at an extreme, and they're all at an extreme, and they're all saying the same thing, just flashing at you. It's like breath. When it matters, it should be really obvious.
Yeah, but it's more reliable and actionable when there's pessimism.
Summer of 2022, every single one of these things was just blowout extremes in the dumps. And then we were talking about it. I was going around Asia last summer talking about it still and being like, did you see these sentiment readings? But that's really how you want to take sentiment, right? Like in the middle of a bull cycle, does it really help? It's probably a lot of noise in there. At turning points, there could be some gems in this information.
Yeah, especially on the pessimism side. Because like I said, they tend to stay optimistic during bull markets. They're buying stocks during bull markets.
I think this is a great data point in summer of 2020.
I started my presentation last summer and at the NAIM annual conference. Where was this? This was in Arizona. It was in Arizona. And I remember the Heat were in the playoffs, as a matter of fact, and I was watching at the bar with Riley Rosenby. So we were Andrew Thrasher was there too, by the way. So I was I started out the presentation. I was like, okay, raise your hand if you think that we're in a bull market. Nobody raised their hand. This is last May of 23. Raise your hand if you think that we're in a bear market. The whole room, few hundred people, all raised their hand. Literally 90% of the room raised their hand. Raise your hand if you think the stock market closes, the S&P 500 closes higher at the end of the year than where we are today. Again, this is May of last year. Nobody raised their hand. Raise your hand if you think the S&P 500 closes lower at the end of the year than where it is today. The whole room raised their hand. So I said, okay, for the next 45 minutes, I'm going to tell you why I think all of you guys are so wrong. then they got a chuckle out of it, and I went on about my business, and I did my thing, and as it turns out, the market did very, very well, and they took it well. I think that my information was well received. I think they enjoyed that presentation. Anybody who was there that's in the chat, give me a shout. Let me know what you think. I thought I did a pretty good job. I've given these presentations a lot over the years, obviously.
Did you know before you read the room that you were going to get that kind of a response? Like, how'd you know how to do that?
I had a funny feeling. Well, sentiment was in the dumps, like you said. So I was just kind
Dude,
of
it was April of 23, man. So yeah, we had just come off a terrible year.
The bull market,
whatever.
The Heat were in the playoffs. The Heat were in the playoffs. They may have been in the finals. So it was late. It was like, it may have been June.
No,
I mean, everyone knew it was a new bull market by June of last year. So that's embarrassing. After
it wasn't June yet. It wasn't June yet. It was April.
May earnings report made it very clear to anyone who wanted to pay attention last year. It did.
No.
It did. And the sympathy buying that came with it.
I'll tell you right now. Hold on, because I really want to know. Here we go. Flying in Monday at 3. Oh, it was May. So it was May like 12th. It was May 12th, Strazza.
Close.
All right.
They were all super bearish. So no,
can I bring on Greg Harmon?
Everybody knew it was a bull market. We assumed it was a bull market because we actually counted, and the market bottomed in June of 22. So by then, we were already a year in.
Yeah, I mean, it was a raging bull market by this time. So it was May 25th of last year. If you weren't on board by May 25th, I'm sorry. You should probably find another profession.
All right. Can I bring on Greg Harmon?
That is literally my point. All right, bring in Mr. Harmon.
All right, let's do it. Greg Harmon coming on the show. Dragonfly Capital.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Greg Harmon.
Good morning, guys.
How are you, my man? Long time no see.
Yeah, it's been a while, hasn't it?
How things?
Things are going all right. How about with you? You got like a bunch of kids now.
Dude, I got an army. They're multiplying. I'm getting two at a time these days. And one thing I've learned, I didn't quite realize this, and for you people who aren't parents, yet, when you go from 1 to 2, 2 to 3, like it's not like, oh, double the job or a little bit more of the job. The amount of work it takes grows in Fibonacci numbers, right? Right. Like 2, 3, 5, 8. 13,
Yeah, I'm on the tail end of it now. My youngest is going to be a senior in high school, so it's getting easier at this point.
Amazing. Well, happy Fibonacci Day to you.
Hey, thanks.
Today.
Yeah, it's a good day to talk about Fibonacci's.
How does one in your neck of the woods celebrate Fibonacci?
By watching the account balance go up.
I'm saying, man. That's the best answer I heard all morning. So, why don't you? I want to hear your thoughts on, your perspective on the market, so that the folks who are not familiar with you, know through which lens you view the market. I'll give my little intro. I met Greg Harmon. I knew of Greg Harmon even before we met. This must have been like 2009, 2010. You were an early blog, part of the StockTwits blog network. This is 15, 16 years ago. I was still on the street at the time. And I remember Josh Brown being like, JC, you can have a blog. This guy, he's still on the street and he's got a blog. So, because remember, compliance back then was still, it wasn't.
Yeah.
Hey, so, me having a blog, like I remember going to a new firm and like, it being a prerequisite. You want me to work here? I need to have a blog, right? So it was a big deal back then. It was a lot harder. I remember Josh Brown being like, you need to meet Greg Harmon because he's figured it out, So Greg Harmon, CFA, CMT, double whammy there. And then, and then Greg and I obviously met, a few years later, probably in San Diego, if I had to guess, or New York, or a combination thereof. And then many times after that over the years. So Greg Harmon, welcome.
Hey, thanks. Yeah. So I spent a lot of time on the street, but actually, in 2009, as when I started blogging and started sharing all my ideas on Twitter and StockTwits, was because I got laid off. And that's the last time I was on Wall Street. It was January 2009 when I got shown the
I
door.
didn't know that part. So the blog started because you just needed an outlet. You new chapter in life.
Yeah, it's actually I had started. Who knew in 2009 that it was going to be a long-term recession, and so yeah, I just thought, okay, well, I'll get another job in a few months. I'll start a consulting business, and just started posting charts of stuff that I liked on Twitter, and the StockTwits guys found me and said, yeah, you should do this over here too. Went to one of their events in New York, and they started saying, you should do this thing called blogging. I'm like, what the hell's that? Like, okay, fine. Yeah, I'll start writing up ideas and then do that. And yeah, it's been, yeah, I guess you're right, 15 years now. Wow, it's doesn't seem like it's been that long.
Time flies, man. Time flies. And so, why don't you tell the folks what you do for your day job? Because I think it helps give some perspective as to through which lens you view the markets.
Yeah, so that blog evolved into monetizing the blog, so putting stuff behind a paywall, and then as we got into the 2011-12 era, clients were starting to say, like your stuff, but the economy's coming back. I'm getting busy at work. Can you just manage my money for me? So most of what I do day to day now is with that lens of managing money for clients. And I do it with a kind of a short-term perspective. It's more focused on the CMT part and a lot less focused on the CFA part, where I'm looking at positions using mostly options strategies to exceed market, to exceed the performance of the market by using some leverage with options, but keep a large cash balance as well to have a big cushion and provide safety against any kind of a downturn. So do trades that are usually between 4 weeks and about 3 to 5 months for the most part. There's definitely some longer term positions because the CMT in me says don't sell it if it's still going up, so just keep staying in. So big positions still in things like Apple and Microsoft and the whole Magnificent Seven, and that's really what has been what's driving what I do on a day-to-day basis.
What do you say? What do we say we get into some of these charts and show the folks, some of the work that you're doing here? You want to start out with? Why don't we start out with S&Ps? I see a lot of lines and colors and all kinds of stuff going on. You want to walk us through this?
Yeah. So my perspective on the S&P starts with the broader view, and you've got the daily chart up. No, you've got the weekly chart up there. The weekly chart. To me, has been driving everything since October of 2022, when we started moving up out and creating that cup with the cup and handle. And then if you weren't convinced by the end of the year of 2022 that we were coming out of the bottom of that pullback in 2022, then you certainly should have been convinced when we pulled up out of the handle in October of last year. And it's been straight up since then. So there's a few things that have been going on, right? So that cup and handle has a price target on it of 560. And you can see from the chart there, if it's big enough for you to see on your screen, that the 1.618 Fibonacci extension of the retracement of the 2022 pullback is right at that same area at 561. So this is what's been driving what I've been thinking, that we're probably going at least at 560, and then we see what happens from there on the S&P.
So there's a few things going on here. So you've got the RSI up top, you've got the MACD on the bottom, you've got Bollinger Bands. Is that a traditional Bollinger Band that you got going on?
Yeah, it is.
Weekly? Then you've
Yep,
got
yep.
then you've got your Fibonacci retracements. Then you've got the volume, and then you've got a smoothed volume, right? How do you? And on top of that, the next chart is a daily chart of the S&P. So now you're also incorporating multiple time frames. Can you talk about like how you use all of these different things? Like, is there like a paralysis with too much analysis? Like, how do you avoid that with all? You know what I'm saying? Like, for real.
So looking at that weekly chart of the S&P, that just tells me, okay, the trend is up. So I'm looking for things that are going up. So that's the whole benefit of having that chart there, is that, okay, the trend is up and there's lots of room to the upside still. Looking at the daily chart, you start to see things like if you look at the RSI there, you can see the two trend lines I put on the RSI, and the one through 2024, early 2024 was the divergence in the momentum compared to the price action, and we eventually had that correction in April, or that pullback in April. But what's been I think a key tendency in this market is that many of the let's just call them pundits, many of those that are talking about markets have been looking for that divergence to happen and happen and happen again. And I drew that second line on there because that's what people were focusing on up until last week, was that we weren't at a higher high in momentum as price was going up, but that there was another divergence coming and that we're going to have this crash coming. And but what people seem to miss in this focus, and why you need to look at the trend in the RSI and the how it's continuing, is it's not a top until it stops going up. So we kept going through that, and now we're at a higher high, and we've continued to move up to all-time highs. Where we've got like 6 in a row in the S&P over the last week or so. So that drives the focus of everything. The longer term chart saying trend is up, the short term chart saying, well, maybe we've got a little correction coming, but no, actually now we don't, because of the movement we've had. So let's look for stocks that are moving with the trend. Let's look for individual stocks that are continuing to move up as well.
And then how do you? So okay, so line go up, we're in an uptrend. We want to look for things that are going up. What is the next step? Are you looking at which sectors are going up? Are you looking at which sectors are leading? Like, what is the next step in terms of finding, or are you using a more bottoms up approach, right?
Yeah, it's a more of a bottoms up approach for me. I mean, I also look at things like the NASDAQ, so the Qs and IWM, and just a quick glance at the Russell 2000 says, okay, stay away from a lot of the stuff there because it's been moving sideways for 2 years. So we can shut that one down, and let's focus just on larger caps, mid caps and large caps. We get into then the Qs, and the Qs, especially on a weekly basis, look exactly like the S&P. So we can definitely
a lot of the same components, right, Greg?
Yep. So we've got that same cup and handle on the weekly chart. This one has a target to 510, and you see the 1.618 extension of the retracement is at 504. So there's still good room on both of those as well. So maybe we could focus on the technology sector, and go figure. Everybody's talking about these 7 stocks that we're calling the Magnificent Seven, and they keep going up. So why not just establish good positions in them, and then look at the broader base of what's going on in my universe from a bottoms up approach, to look for stocks that are also in an uptrend. And many of them have tended to be technology stocks. I think there was something that you put out a couple of days ago that I just succinctly said what I've been saying for the last 3-4 years to people, is when they're asking me, do you see a rotation into energy? Do you see a rotation into this or that? I'm like, what do you like longer term? I'm like, technology. Technology forever has been driving what's been going on in the economy and the changes in the in markets as well. So you have to keep focusing on technology. Technology is always going to lead. So that's where I am right now, and it's been an easy market, I think, to be able to look at when those large caps, those stocks over $1 trillion in market cap, are going to continue to go up. And we had a breakout just earlier this week, late last week, in Microsoft and Netflix and Apple, and these major companies are going up. Why not own them?
Why don't we take a look at a few here? You brought Microsoft and Netflix. Why don't we start with the Microsoft? Obviously showing relative strength, doesn't look anything at all like the Russell 2000.
Yeah, yeah. So it's got that same cup and handle in it, right? Go figure. That the stocks that are big components of the Qs have a large influence on what the chart looks like, and look very similar. So we've got that cup and handle on there, and that has an upside target to 490 on it, and we've got a 2 times extension of the 2022 pullback there at 485. So, and we just got to 448 yesterday. So there's a lot of room left in Microsoft and I know that there are some people that get attached to, well, this company's so big it can't move. I don't want to be in this behemoth. It's never going to have any momentum. It's not going to go anywhere. But I mean, look at it. It's been a beautiful place to be for the last year and a half.
Greg, I think we all need to go through that. I certainly did. I could tell you exactly in 2013, I was that guy. Stock market's breaking out to new all-time highs. I wasn't believing it. You need a mean reversion. We got to come back. This is unsustainable. All that bullshit that you tell yourself just because you're wrong.
Yeah,
I went through. I'm cherry picking that early 2013 period because that's when I finally got it right. I was definitely screwing that stuff up before that. I've certainly screwed stuff up after that, but that moment in time was a huge aha moment where, like, stop fighting trends, you idiot. Stop. That early 2013 period. And by the way, I did, and that worked out very well for me shortly thereafter, but it took that. Don't we all have to go through it, Greg? To
absolutely
finally get it? Just because you're at the top upper right of the chart doesn't mean there's resistance there, right? Like, pinch your y-axis. Like, there's still room.
Yeah, exactly. Just because it's at the top of your screen doesn't mean it can't go higher. Which is the same as
right?
Yeah, which is also the same as just because it's hit the bottom of your screen doesn't mean that's support either.
That's right. That's right.
But you do have to live that. You have to get through that, and it's we've got our reptilian brains here telling us to do things differently. So it's something you have to train yourself just through repetition, or however you go about training yourself to realize that that's the case.
All right, let's talk Netflix. So you brought 2 Netflix charts, not just one. So is there a reason that you brought 2, that you feel the need to do a multiple time frame analysis here on the old Netflix?
Yeah, so if you start with the weekly chart that you have up there, we can see that since April 22, it's definitely been in a strong uptrend, and it's coming back towards a retracement of to the top from October of 2021, the all-time high, just over 700. So it's getting to the point where maybe you want to start paying more attention to it there, and that's really the perspective that weekly chart gives you. But the daily chart then shows you some interesting things when you take a look at the Bollinger Bands, right? So if you go back to like January of 2024, the Bollinger Bands were kind of thin, kind of tight on that daily chart, and you had some consolidation, mostly below resistance. But what happens when the Bollinger Bands get really tight is you end up with a situation where this is what happens before a big move happens. And we got their earnings in January, it popped to the upside, and we had the Bollinger Bands spread out, and then they started squeezing back in again, and we got to that same point in April this year. With the squeeze, came back to the downside with just a shallow retracement, held the gap up, And then we came back into this period that we're in right now, where the Bollinger Band started squeezing in again. We're pressing against resistance, and you get the sense, okay, something's going to happen here. And with momentum pointing to the upside at that point, as opposed to like looking over April where it was declining, you would suspect that any kind of move that's going to come out of this, any kind of squeeze move that's going to come out of this, is going to be the upside, and that's what we started seeing on Friday last week with the breakout there.
Aren't we getting back to those former highs now for the first time?
Yeah.
How do you think about that resistance? Like, is it like let it pause and buy a breakout? Like, how do you think through that?
Well, we got in the stock on Friday, and we did it with an option strategy so that we could sustain any kind of short-term pause or short-term pullback. But for me, it's if like you said, line go up, you just keep staying in it. So just because it stopped at 700 last time doesn't mean that's where it's going to stop this time. So why not keep holding it? I don't need to take profits. I've got layers of trades on in Netflix. One with a cap at 700 that is an options trade that expires next week, and then another one that goes out to 725 for mid-July. So that there's lots of potential for upside, but it could take its time to do it too.
Can you talk about your preferred option strategy? So you're looking at this from a money management, asset allocation, standpoint, but you are executing through options. You talk about this multi-leg strategy that you've got on Netflix. You don't have to get into all the details, but maybe more generally speaking, like, how do you think through an options trade? Is it different every time, or are there some similarities between the strategies?
So the end result can be different every time, but the thought process about it is always driven from technicals, and then getting into, okay, I don't care what the value of the option is. I don't care if it's overpriced or if it's underpriced or fair valued. What for me is, okay, do I have a directional play that I want to make in this trade? And if I have a directional play, then there's one option that I want to own that's going to drive the trade. So in Netflix, then it would be some call option that I want to buy to be able to take advantage of upside. The second part of that process then is, okay, if I've spent money now, I've spent premium on this option to take advantage of that upside, how can I do it cheaper without limiting my upside? So I'm looking for something to fund the trade. So oftentimes that'll either be converting the call option itself into a call spread, or into a call calendar, or a diagonal, selling short-term options against buying longer-term options, so that with the hope that the short-term options expire before the price hits their strike, so that we can continue with the long-term option. And if it's still too expensive, then looking at areas of good support where I would be willing to buy the stock and possibly selling downside puts on that as well. So it's the process is the same. The end result may not be the same based on what the technicals show me, but there's always going to be a driver. So one option that I'm going to own, some option that I'm also going to sell to lower the cost. And maybe it's a couple options that I'm selling to lower the cost.
Even when options are super cheap, you're always going to try to lower the cost, even if they're super cheap? Or do you say sometimes, oh my God, they're so cheap, I don't need to do that?
Yeah, so if you look at, say, setting up a stock trade in Netflix, and you say, from that daily chart, you say, okay, it broke out about 670. So if we want to use 670 as a base to say that if it breaks back down below that, I'm wrong, then you're willing to give it, say, a $5 trailing stop or something like that. So one school of thought is, okay, take as much money as you would put into the stock, this position size you would put in the stock. Maybe you're going to buy, 500 shares. Go buy five call options that have a dollar value, price attached to them that are less than the $5, and then you can give it a lot more leeway because you're willing to lose that $5 anyway.
Yeah, you're a limited partner.
Yeah, so sometimes it's like that. When you get to some of these stocks that are just like crazy now, like Broadcom, that's like all these AI stocks that are like thousands of dollars, and the options prices are like $100 each.
Yeah,
you end up with much smaller positions than that, and you have to sell something to be able to do that.
Yep, I get it. I got 2 questions for you. First of all, the OODA loop. You're a behavioral guy. You're a math guy. Does the OODA loop mean anything to you?
I've never heard of the OODA loop before. What's that?
It's coming. It's coming. All right. I thought maybe you had something in there. The OODA loop. Greg's like writing it down. Look up.
I am.
What the OODA loop is. I'm fascinated that you're not familiar. So I guess we're early in this OODA loop situation, because you strike me as one of those folks who, you'll be very interested in this sort of stuff.
Okay.
The other thing is we're getting questions from the chat about your crypto allocation and your thoughts on cryptocurrencies in general. I'm very interested in your thoughts too.
Yeah, I don't do crypto for clients. I do. And I've 10 hodlings of Ethereum and Bitcoin.
Well, at least you're using the proper nomenclature, Greg.
Yes, yeah. So when in the classes that I teach, I tell students that they should get involved with this stuff, and they're going to like it. And at the very least, now, if you were scared about getting ripped off at Coinbase or some custodian, some crypto custodian getting hacked, at the very least now you've got an option through some ETFs to get into there. And the SEC is in there looking at this stuff. You've got BlackRock, the biggest player in the world in managing money, managing this stuff for you. This stuff is not going to go away. So as more and more people get involved with this, I think it's more of a long-term play. So a friend that we both have, Lee Drogan, has talked to my classes, and I think he's got a really good perspective on this, and he should, since he's managing crypto funds. That there's these parabolic adoption cycles that happen in crypto, and we're going through one of them now, and maybe we've got pause now, but every time that some new use case potential comes out, we get this big ramp up, and then it kind of turns back into, well, this is a casino, and people lose interest, and it starts to fall off a bit, and then we get another use case that comes in and it ramps up again. So I think that that's going to continue. I mean, you can't say that crypto is not going to be anything. It's been 15 years now, so it's not going away. So for me, it's buy bits of Bitcoin when I've got some extra cash to do that, or buy some Ethereum when I've got money to do that. I experiment with all that stuff too. I've got a Phantom wallet full of dead NFTs and some OpenSea stuff on the Ethereum side too. But I'd like to play with all that stuff just to see what's going on there, because you start to understand what the use case is for crypto, and it's not just silly funny computer money that doesn't really do anything. It's like there are going to be broad use cases for crypto and blockchain, and it's really just about being able to route value around the internet, as opposed to an ownership around the internet, as opposed to it's just silly funny money, monopoly money that you can hope that something happens to it.
It's a good lesson, guys. If you're out there listening, listen to what Greg is saying. He's getting his hands dirty. He's playing with the toys. It gives him a better understanding. Even if, his NFT isn't worth anything, or, his Dex screener account isn't working out very well or whatever. you see a lot of people like, oh, this is all fake. It's a big Ponzi. Like, it's very obvious that these people have actually never transacted on a decentralized exchange. It's very like you're just calling yourself out for being dumb and ignorant, by just dismissing it blindly, dismissing something you've never experienced. That's like being, oh, I don't like ribeyes. Have you ever had a ribeye? Have you ever had a ribeye? Eat a ribeye. Tell me you don't like it. If you don't like it, you probably cooked it wrong. Right? Cook it bad. Do better. So that's how I see it. So great reminder, Greg, for everybody. Can you tell the folks where they can find you? Spencer, can you drop that link in the show notes?
Oh, yeah.
Yeah. So I'm on Twitter all day at Harmon Greg and Stocktwits. You can find me on LinkedIn as well. And if you happen to be in the Cleveland area, come on down to my office at Case Western Reserve University, and I'll walk you around the only building on campus that has no square walls to it, and talk to you about what we do on the finance side in terms of raising young people to hopefully understand better markets.
Love it, Greg. Love it. Thank you so much for coming. I will hope to see you soon.
Yeah, hope to see you soon. Thanks, guys.
Greg, next time I'm in Cleveland, I'll reach out. I'm in Cleveland every so often. So
awesome.
All right. Thanks a lot, Greg.
All right, Greg. Adios, my man.
Greg Harmon. Again, the link to his Twitter and is in the description right there below.
Dude, Greg Harmon is an OG. Greg Harmon had a blog, as he said, had a blog, was on Twitter before me. OG.
Do you happen to know when you joined Twitter? I know when I joined
me
Twitter.
Me personally was in 2008, but I had a different account back then.
Oh, damn. You beat me.
Yeah, I was in 08 during the financial crisis. I mean, that's when we all discovered it. So probably early 08.
Yeah.
Maybe 07, maybe late 07. But the whole blogosphere, financial blogosphere, FinTwit, all that stuff was sparked by the great financial crisis, right? It was like, all this Wall Street research and all this bullshit from the sell side. Like, investors were finally like, oh, as it turns out, not only are you guys completely full of shit, you caused this problem, right? So that, people were like, well, we can't trust them officially. And then the financial media was the biggest circus of them all. They missed the whole thing. They're prancing around these CEOs that are just blowing themselves up. The guy with the tan. What was that guy with the really, really bad tan? From Countrywide.
Yeah, I know who you're referring to.
Whatever his name was. Strazza would know. What's this guy's name? You're on mute, Strazza. What's his name?
I do not recall the Countrywide.
The Countrywide guy. Angelo Mozillo.
That's it. Mozillo.
Mozillo. The guy with the really bad tan. I'm sure he loves his kids. But he costs investors a ton of money, and these financial media outfits just prancing them around like these guys are, not criminals. And so, just investors around the world were like, we don't need this traditional media. You guys suck, and we don't trust Wall Street anymore because you guys suck and caused all this. So that now it's like, why don't we just go to the source? If you want to know about the economy, go to the economist that doesn't suck, and you can just go straight to the source. If you want to know about technical analysis, you go to the technician. You want to know about seasonality, you go to the seasonality guy. You want to know about Fed policy. You want to know about how to be a financial advisor. You want to learn how to blog, right? Like, all of these things, really came to be from, the genesis was the great financial crisis. And, I can't imagine anybody who still has cable television and watches that crap. I can't imagine anybody still reading sell side research, right? But that started 15 years ago.
Yeah. All right. Steve, I know you have charts on your mind. Can we talk about the XLK thing real fast?
What happened?
What about it? The weightings. Yeah. Listen.
They're changing the weightings?
Yeah. So, and I think NVIDIA is about to go from being way too small to way too big, and Apple's about to go from being way too big to way too small. I don't understand exactly how they do these weightings. It seems like it should be a lot easier to me, and it should line up and be proportionate to market cap, which is not the result of the reallocation. what I will say is that thankfully, I don't really invest in these indexes, so I don't quite care. I don't know if you feel differently or not, JC, but I don't know the mechanics
I don't invest in the indexes either.
or the nuance. No, I know. That's what I'm saying. Like, we should probably know why Nvidia is about to be 20% and Apple used to be 20%.
Because it was 4.
I was like, what?
Because Nvidia was just 4.
Yeah, but Apple should still be the largest.
Yeah, but you know what?
Steve, can I
And
tell
again, I'm just
can
guessing.
I tell you why?
I'm just guessing and shooting from the hip, but my suspicion is that Apple has some discretionary in it, while Nvidia is a much more pure play tech.
Apple's not in discretionary. Apple's
I
in
know
tech.
that.
No.
No, that's not one.
So the XLK has these diversification rules, right? And they, unlike other funds that would just trim everybody equally, I think it's if you're above 5% of weighting, you are, in this group that needs to be dealt with. They don't do it proportionally by every stock that is at least 5%. What they do is, if they take all the stocks that are greater than 5% of the fund, and then they say, okay, the smallest weighting, we're going to just trim the crap out of you, right? So that's how it works. So they just are trimming Apple because Apple is going to be the small of the Microsoft, Apple, Nvidia.
Well, that's terrible.
Qualcomm, Apple will be the smallest of those 4. So,
well, that's just a bad way to do it. I'm surprised at State Street. That's pretty awful, right? This doesn't have to be so hard. They should be proportionate to their market caps. So
they should be.
While these funds are great information and we use them to see, what different groups and sectors and areas of the market are doing on a cap weighted basis, I don't think these are good vehicles.
So this rebalance is happening. It's supposed to happen on Friday, this Friday, I think.
Here's what you do.
So we'll see. There's going to be a swap. There's going to be a lot of forced buying of Nvidia, a lot of forced selling of Apple. Not a ton. It is only one ETF after all, but
it's already happening though. That stuff starts happening. So
yeah, it starts coming in ahead of time, and then let's just put things in perspective. The XLK, in terms of assets under management, is $65 billion. And we're talking about $3 trillion companies. So this ETF is a rounding error.
Here's what you do.
Best.
If you want to own XLK, you have the right idea, right? Go build your own XLK in your brokerage.
There's nothing wrong with owning parts of There's nothing wrong with owning XLK, Strazza.
What?
There's nothing wrong with owning XLK.
You're owning a strange overweight allocation to God knows which mega cap.
Yeah, but if you know that, and you know that going in and you're okay with that, then that's fine.
But Apple shouldn't be dropping to 5%. If XLK gave me 20% Microsoft, 20% Apple, 20% Nvidia, and was consistent about that, I would say that's great. But if it's 20% Apple and 5% Nvidia one quarter, and then 20% Nvidia and 5% Apple the next quarter, what kind of joke is that? That's terrible. Who wants that? What's it going to be next quarter?
Who wants that? I'll tell you who wants that. $65.5 billion
Steve.
worth of people.
You could do a better job on your own with minimal work, is all I'm saying.
Yeah, but that's the thing. Some people, number one, don't want to do the work. Number two, a lot of financial advisors can't do that. They have to be in ETFs based on their mandate and how they manage money.
Yep, fair. I always forget that.
Right, Strazza's like, I have to remind Strazza that not every investor is like a white guy from Greenwich, Connecticut, right? Who audited the hedge funds and brokers and now lives in Key West, and a very unique set of experiences that got you here. There were people from all over the world with very different experiences and job functions, And I'm not breaking balls to Strazza, even though I am. I think it's important for all of us to remember that we are all approaching the marketplace from a different perspective, and a reason why I asked Greg Harmon to kind of share through which lens, he views the marketplace, and I ask that a lot because I think it's important for people to understand, like, through which lens are you viewing the market,
especially like when we're doing research, right, and we're out there in the public. Like, we come out here and we talk about stuff, but we're really discussing all of this and our positioning and the way that we're viewing the market. We're doing that through the lens of our own time frame, our own risk preferences, and our own portfolios.
Yep. No doubt.
Not yours.
All right. I've got a few more on my list here, and I know Steve has some stuff. Lennar had earnings overnight. It was a beat and a beat.
I love this. Okay, so they're digging in. This is not going to be a top, guys. It's not going to be a top. You know, we see these patterns from time to time. I feel like you guys, you know this one by now, Spencer, right?
What?
Look at this clear line of support sitting here at 150. I don't know. JC, is it a top? You buying puts? DR Horton, I see a lot of non-tops.
For the 200th time over the last couple of weeks, I think that rotation into consumer discretionary is the risk. People talking, consumer discretionary came into last week down for the year.
Yeah, we're going to talk about
So
some.
now within consumer discretionary, home builders have been the best area, and that's who you want to bet against. Just as we could potentially start to see rotation back into discretionary. No, sirree, Bob. No, sirree, Bob. Can we?
I like these setups a lot. I might get involved here today.
Can we hot corner, please? Warren Buffett at it again.
There's really not much.
Again.
Yeah, I'll run the bumper just real fast before hot corner. Philip Morris PM down today. They're suspending online sales of Zyn, which is all the rage. It's what all the kids are doing these days. It's the Zyn.
But this is what happens with big tobacco. I don't really care, but it's pathetic, and the U.S. government should be embarrassed. Juul came out. People stopped smoking cigarettes. Everyone was smoking a lot less cigarettes. I'm not saying Juuls are good, but if you walk the streets of New York City in 2018, it was all Juuls for like a year there. What happened? Big tobacco takes a stake and pretty much stops the production of Juuls. Now you can't even get Juuls. You can't get all the flavors you used to get. They killed Juul. Now with Zyn, Zyn's very popular. People are stopping smoking cigarettes using this Zyn stuff. Everybody loves it. It's really catching on. What happens? Big tobacco comes in, they get a stake, and they end the production of Zyn. This is what they do. They're making sure that everyone continues to smoke cigarettes forever, and everybody else.
They meaning the government, Steve, right? They meaning the government. That's what you're saying.
Yes, at the government and big tobacco.
Yeah.
It's really insane.
I'm just making sure clear
how strong of a lobby this is, but you're seeing it. We're seeing it over and over and over again over the past several years. It's really sad. It's scary. It's too bad.
Couple more things. Chegg, big round of layoffs. Almost a quarter of the company getting laid off. 441 employees. CHGG. We have some M&A in the water space. PRMW is merging with a privately held bottled water brand. These guys own Poland Spring and Pure Life and a bunch of other stuff. And so water bottle conglomerate there. Boston Scientific is buying Silk Road Medical, SILK, for $27.50. And let's do the hot corner.
Do it.
So hot right now.
All right, Mr. Strazza, we went over yesterday all the details from our event last week. We had a live stream yesterday at 2 o'clock where we answered questions. Spencer, can you drop in last week's video? Drop in the link for the live stream that we did yesterday where we answered everyone's questions. I thought we did a really nice job on both of those. Kudos to Strazza, kudos to everybody involved there. I tried to do my best to chime in from my perspective as well. I thought we did a really nice job there. We got a lot of great feedback. And then this Thursday, 11 a.m., we are dropping a new special situation, and we're doing a momentum masterclass where we're talking about the primary trend reversal in terms of when do we buy, right? What does that mean, primary trend reversal? Just because Tommy Tuberville is YOLOing Adobe and Nancy Pelosi is buying Tesla and, Warren Buffett is buying Oxy, that is great. That's good information. But what do we do with that? How do we enter? And that's on Thursday for premium subscribers of Hot Corner Insider. So very much looking forward to that.
So Uncle Warren's back here this morning. Nothing new.
Yes.
Nothing new. If you want to throw up the chart, it's not a giant buy or anything special. This stake is old news at this point, but he just keeps buying at the same level. And I think you could more or less keep selling puts at this level. The problem for me with Occidental is when I look at energy, first of all, that's tough. It's tough to convince yourself to put on a new energy position right now in this tape. And it's even harder to pick Oxy as your vehicle because Oxy has been an awful laggard despite all of this insider buying. Another one I want to talk about is Nerdy. Just dropped the chart in, guys, if you want to throw it up. I think this is a great example, JC, of what we get on the hot corner 90% of the time. It's a chart like this. It's a CFO, or in this case, a CEO. We've seen a lot of insider buys from Nerdy this year, late last year. They keep coming in, trying to accumulate in this range. This is nasty, right? This is when insiders tend to be out here buying them. We put these on our list. Maybe one day we flip this arc around, JC, and paint it green, and this ends up being a rounding bottom. But for now, this is a nasty chart, right? So this is why we take the names. We follow these big buys. This is a sizable purchase from a CEO, right? One of these little techie startups. This was a SPAC not too long ago. It's, chopping around here at the lower bounds. You do have a level you could trade it against. We probably wouldn't. That's a bit cute. We would wait for this thing to really start reversing trend. And like I said, if this turns out to be some sort of rounding bottom pattern or base that we want to buy, we'll do that once the trend reverses and turns higher. But we'll have to stick this one on our list and track it for a while.
This is a little software company, claiming to do AI from the loo.
It's fintech.
Yeah, we don't really see a lot of companies from the loo, especially tech companies.
Yeah, and the CFO buying lemonade stands out too. That a lot of buys in that name as well, and it's a chart that looks similar to Nerdy. It's just a range. Just a range coming off of a really, really nasty downtrend. That's it.
We got a much more interesting situation to talk about on Thursday, which I'm very much looking forward to. So, Spencer, if you want to drop the link for anybody who wants to attend on Thursday, premium subscribers of Hot Corner Insider, obviously all welcome. We do this every week, but we got something extra Thursday, and we're also going to talk about momentum, which is not something we do every week either, and really do a deep dive into how we look for those primary trend reversals.
Yep. Use the link in the top of the description, everyone. Want to get in that Thursday video. All right, Steve. I know you had charts on your mind. So
JC's been on this discretionary thing, and I think it's the right idea. So let's look at some discretionary charts. All three of these names that we're going to go through were some of our better, some of our bigger winners last year, but they've been quiet this year. And this happens during bull markets and uptrends, right? There are periods of consolidation and corrective waves along the way. I think, and I keep coming out here and saying this, buying corrections in bull markets is the best move. It's the right course of action right now. So I found some that from a more primary trend perspective look really solid, but have been chopping sideways and even, drawn down a bit over the trailing couple of months. So let's start it out with Actually, start out with DraftKings, the dual pain. Because I want to tell this story about the relative trend. Why are we confident buying weakness or buying dips? Really, we're buying strength off the dip, right? In something like this. Look at the gray lines in both of these charts. The top pane is the absolute price trend. The lower pane is the relative trend. This is DraftKings and DraftKings versus the S&P 500. These trends, from a primary trend perspective, reversed a long, long time ago. Right? They've been pointing up. You could see that with the moving average. Okay. Now, what do we do along the way to trade them when we know the primary trend is at our back? We use the anchored VWAP. If you want to drill into the next one, I've zoomed into these last three arcs, right? So what we're doing here, and go back to the last one again first. What we're doing here is we're anchoring VWAPs. I've drawn these as tops here, kind of in jest. And we're anchoring VWAPs from the pivot high of every top. Once that VWAP is recaptured, we're confident that buyers are back in control of the short-term trend, and we want to be long, playing for a leg up, right? That worked late last year. It worked again in the first quarter of this year. It's all circled in green here. This is when the pivot high VWAP was recaptured. Pivot high VWAP was recaptured. What's happening right now? Let's zoom in on the next chart. And you could see this all closer, drawn it a little bit differently. I've also added trend lines if that's something that you're into. The VWAP recapture and the trend line break tend to happen around the same time. So you see in the last couple of scenarios, if you bought the VWAP recapture, you had a nice little trade in there. If you bought the VWAP recapture, you had a nice little trade. I've also put on the 50-day moving average in this case. It should be flattening and then curling back higher as you're entering a setup like this. That tends to be the case. You saw that was the case the last 2 times, starting to curl up again this time around. You could wait here for the trend line break. I think the VWAP will get you done, though. That comes in right around 42. It happened yesterday. We're getting a little bit of follow through today. I think depending on your time frame, you could just do this for a trade and trade it back to the pivot highs. But if it's anybody with an intermediate to longer term time frame, I think you really do want those old all-time highs in DraftKings, which come in right around. So the price
something
highs 2021 called 74, right? Almost a double. All right, another discretionary name. Actually, let's go to Palantir first. Let's do tech. Software has been under pressure. What do you do when a group is under pressure? You go and look at the ones that have not been under pressure. You look for that relative strength within the industry. Palantir has been absolutely rocking, even during this little tech wreck, software sell-off, whatever you want to call it. Palantir has been trading like one of the big caps. Now, you do the same thing here. You drop some VWAPs. You could see how this chart is kind of pinching. I have the green VWAP from the pivot highs last year, and then the red VWAP from the pivot highs this year. You got a little bit of a VWAP pinch there, and we're breaking out. I think 25 is a good level. And this one, I think you want to play back to those old all-time highs at 45. You could see the reversal is very much in. Primary trend is higher in this one as well. The third one is a little bit different, because there's been so much consolidation and the reversal happened so early on. Throw up Shopify. I think you could argue we have shifted back to a trendless environment in Shopify. Do we have the Shopify? Did I not send it?
It's in there.
There it is. Okay, so what do we do here? I have that VWAP coming in from the left-hand side of the screen is actually the VWAP from the pandemic lows in 2020, coming right at the current prices. It also worked as a nice cap on prices last summer. That comes in right around 70, 69. But look at the 200-day moving average in these, right? We got these reversals in 2022, JC. Shopify, that bottom was in. This was one of the early trend reversals when people still thought it was a bear market back in 2022. Shopify had already reversed trend, not just on an absolute basis, but if you look in the lower pane here, it also reversed trend relative to the broader market. We had that 200-day moving average start sloping higher, but it's moved sideways. Price is now below it on both the relative and absolute trend. There's some work to do here, but I think it also could be a really nice opportunity to pick up, hot entry in something like this. I think you wait for this top to fail. We have this top that, peaked at 92 just here this year, and we have a little neckline that comes in right around 70. I think this is a buy on strength only type of setup here. You want to make it prove itself to you, break back above those pivot highs from last year at 70. The pivot lows from this year are at 70. The AVWAP from the pivot high is at 70. The AVWAP from the pandemic lows is at 70. You have a big gap where this little short-term top broke down at 70 just a few months ago. I think on a reclaim of that level, you can get long Shopify. You could trade it back to 92. Or for you longer-term trend people, I think at that point, if we get to 92, the primary trend is definitely pointing higher again. And you could hold this one back to those old all-time highs around 170. These are 3 setups that I like a lot right now.
Excellent.
There's 2 trades here in consumer discretionary. I know you mentioned some tech stocks, but I think there's 2 different ways to look at it. One of them is the leaders, the ones that have already been working despite the relative weakness out of consumer discretionary in the recent parts of this market. And the other is that turn, right? If we are able to get that turn into consumer discretionary, we start to see that flow, you're going to see a lot of catch up. So these are 2 different trades, 2 different ways to think about it. I don't think there's a right way or a wrong way. I think the answer is probably both. That's my answer. That's what I'm doing. I'm looking at both ways.
I just want to say the home builders look so fantastic here. I'm going to be getting long.
Well, that's a good example. The home builders have been the ones that have been doing well despite the pressure in consumer discretionary. Look at some of these different specialty retailers, some of the bigger components of consumer discretionary like Amazon, like Tesla.
I just want to say, when it comes to home builders, JC, there's only one group that's really been consistently better this bull market, and that's semiconductors. It's been the semis and the homies have been like the wow groups, in my opinion. Okay, just like they're always there, they're always working. Short-term
Broker
top
dealers have been up there.
broker dealers have been good, fine. These have been better. When you get a short-term top like this, it usually ends up being one of the best continuation type patterns that you can get in the context of a bull market. These are some really, really ripe setups. I think the home builder indexes will look a lot more like the semiconductor indexes in a few weeks.
Hit that bumper, Spencer. I got 2 things I want to mention. Address some things on the chat. All right, guys, just a little something there on the Trump coin. The Trump coin dropping yesterday. I don't know whether it's a scam or not. CoinGecko hasn't picked it up. CoinMarketCap hasn't picked it up. You can see it on the DEX screener. It's 250 million market capitalization. It's not nothing. Doubled this morning, doubled last night. You know, these things are moving. I don't think Trump has anything to do with this. Also, 2/3 of the tokens are owned by a single wallet. So it's definitely top heavy in terms of ownership. If that means anything to you, I don't have any. It's fascinating to watch. The MAGA coin is almost $1 billion. So there are other Trump type tokens out there. If you're going to trade it, be careful. Make sure you're trading the one that you're looking to trade. Is all I can say. I don't really have much comments on it. Louis. I pinged Louis about it. Louis, thinks it's bullshit.
Not a fan. Fan, JC. He's not a fan.
Not a what? Louis, not a fan.
Louis is not a fan.
And then the other. Sorry, Spencer, I'm not able. And then the other thing I was gonna say, can you throw up slide 2 there, Spencer? I think this is probably pretty interesting. Shout out to the Celtics. I don't really have any beef with the Celtics. I actually like the city of Boston a lot. Have a lot of friends there. My sister lives there. My brother-in-law is an asshole. So, I got some, I love the Berkshires. So I love the seafood coming out of the, that coast over there. So shout out to Celtics. I thought this was pretty cool. June the 17th of 2008, the Celtics won a title. June 17th of this year, Celtics win a title. And 617 is the area code in Boston. So if you don't think this is a simulation, then you're not paying attention.
Yeah. Good for Boston.
That's how I see it. I guess we lost Spencer.
That's it.
All right, guys.
No, I'm here. I'm here. You don't lose me. I'm here.
All right.
Voice of God.
Well, tell the folks what's next.
We got Twitter Spaces at 11 o'clock today, guys, and we have chart requests live at 1. Join us.
See you guys there.
Peace. See you Thursday at 11. Adios.
I can't take no